2014 was a year of divergence for global equities, according to the chief market strategist of Asia at JP Morgan, Tai Hui.
If you look at, for example, S&P 500 is up about 8%. But if you look at Europe, generally speaking, it's currently down about 10%. So if you look into Asia, again, I think there's a great deal of divergence in performance. China was surprised when it comes to the last couple of weeks of the year, where performance in the market continues to improve very strongly. In Southeast Asia markets such as Singapore, we've seen a relatively muted performance.
Specifically, Wall Street hit a series of all-time highs this year, supported by a low interest rate environment. This month, the US Federal Reserve promised it would be patient when raising interest rates. Chief Executive at the Motley Fool Singapore, David Kuo, says US markets will continue hitting new highs.
People are beginning to grow in confidence about the US economy. The unemployment is beginning to come down. The only unknown, of course, is interest rates. And it looks at the moment as though they won't increase interest rates for at least a couple of months. The other thing to bear in mind is that the central banks around the world have printed a tremendous amount of money. There is somewhere in the region of probably 12 to 15 trillion US dollars just floating around the global economy looking for a home. And that is probably what is going to drive the US market.
The jubilant mood was also evident in the IPO market this year. Alibaba became the world's biggest IPO after raising $25 billion US dollars. Senior Managing Director at American Appraisal, Rick Saladi, estimates that there have been 800 to 900 IPOs this year, similar to the 860 deals last year.
Certainly the one that everybody has seen and watched has been Alibaba, and still something higher than it was when it came out. I think it's in the low 100s, and I think it came out in the lower 90s, give or take. You know, that's just such a large entity, and to know how it's going to perform is still really going to take some time.
Meanwhile, in Japan, a bout of stimulus measures from the central bank pushed the Nikkei above 17,000 for the first time in 7 years. Mr. Kuo of the Motley Fool Singapore is confident that the exuberance will continue.
Japan has no alternative, because I think Japan has looked over at America and said, right, what has America done in order to get its economy going? And what has happened at the Federal Reserve is that Ben Bernanke came up with this idea of quantitative easing. In other words, he was printing money and pumping it into the economy. And it has taken 7 years for quantitative easing in America to work. So Shinzo Abe, the Prime Minister of Japan, started quantitative easing a couple of years ago, and it is beginning to show some kind of effect. It's driving down the value of the Japanese yen.
For next year, Mr. Hui of JP Morgan remains optimistic on equities.
Partly because we believe that while the global growth environment is far from spectacular, the inflation environment is also very benign, which in essence is good news for corporate profits, because at the end of the day, they are able to increase their revenue, but then the cost base are still reasonably well controlled. I think the recent bout of dollar strength and also low energy prices is also helpful.
Broadly, analysts are recommending the cyclical sectors to perform well next year. These will include stocks in consumer discretionary and technology.